Hello, and welcome back to the Mortgage and Protection Podcast. And we've got Paul Holland here again to continue the conversation on self-employed mortgages. Welcome back, Paul. How are you today?
Very good, Tessa. How are you?
Yeah, I'm good too. Thank you. So I think this is our fifth episode, isn't it, on self-employed mortgages?
It is indeed. Yes.
Okay, so we've got three more questions for everyone today. So shall we dive straight into them?
Let's do it.
Here we go then. So, can someone with a small deposit apply for a self-employed mortgage?
Yes. If you're a self-employed person, you have 5% deposit, then there are conventional mainstream mortgage lenders out there that will lend you the other 95%. Now, I always say the bigger the deposit, the better. But if you're working with 5% and that's all you have, then it is possible to secure the other 95%. Of course, there are other things that you need to bear in mind. So your income needs to be sufficient to achieve the required affordability to bridge that 95% gap. And you need to have been trading for long enough to provide the necessary proofs for a conventional mortgage application. So if we're looking at a conventional mortgage application, then the bare minimum an underwriter is going to require is one set of accounts. So some lenders will look at one set. And in order to submit one set, you need to be trading for 12 months. So that's a factor as well that will determine whether or not you can do that with 5% deposit as a self-employed person. Another thing worth noting when talking about the smaller deposits is the smaller the deposit, the harsher the scorecard. And by that, I mean the credit scoring part of the application. So the most difficult mortgage to obtain by a long stretch is a 95% mortgage, and that's based from a credit status point of view. So if you've got a small deposit, you really need a squeaky clean credit history.
Okay, so a fair few points there to bear in mind and take away from the episode, but hopefully that makes sense to everyone. So, moving on to question 2 then. Can someone use their partner's income to support a self-employed mortgage application?
Absolutely. So to give you an example, if you've recently gone self-employed and you are yet to submit any accounts to HMRC, thus effectively having no income evidence from a mortgage application point of view, obviously you do have income, but you haven't declared it as such to HMRC by this point, you can still apply for a mortgage as long as there's someone else on the application with sufficient income or other income on the application that will sufficiently meet the affordability. I will assess all the income and all the expenditure from all of the applicants on the application, and then they'll conclude whether you're all creditworthy and what the maximum loan is based on the scenario that you've given them. Okay, so although each application will be looked at, let's change that. Although each applicant will be looked at and scrutinized individually, it's the bigger picture that the underwriter is looking at, assessing. It's assessing the merit of the application as a whole. So yes, if you haven't yet got self-employed income to provide as evidence, it doesn't mean that you can't get a mortgage.
Right. Okay. So that's good news there, and hopefully reassuring to anybody watching this or
Anybody who's
listening
got
to
other
this.
income or a partner with income, that's good news.
There we go.
Anyone that hasn't, it's not great news. But on that point, we'll probably touch on this point again on another podcast. But there are options for people with less than 1 year's worth of accounts. It's just not on a conventional basis. So maybe we could do something around that later on.
Yeah, definitely. That's a really good point as well. Okay, then. So, just lastly, how does a self-employed mortgage application differ if someone has multiple sources of income?
Okay, so an application for someone who is self-employed but has multiple sources of income will differ mainly down to the packaging requirements. When I say packaging requirements, that's the evidence you give. So any income that you declare or try to use towards a mortgage application will need to be in turn evidenced by way of documentation to the underwriter. Okay, so imagine if you're employed and that's your only source of income. Your only income evidence will simply be your latest 3 pay slips, and that's going to tell the underwriter all they need to know about your earnings. However, if you're self-employed, it's a bit different. You submit your accounts to HMRC once a year, and by doing that, that's going to produce documents like an SA 302, a tax year overview, maybe a set of company accounts. Typically, if you've been trading for 2 years or more, you're going to need the latest 2 years evidence of that. So straight away, that already sounds like a little bit more long-winded than just your latest 3 pay slips. So time-wise, that's going to take you a little bit longer normally. Now, imagine if you're part-time employed, you run a self-employed business on the side, you have a couple of rental properties that also generate rental income for you, and you've got a pension pot that's paying you, from a previous employment or something like that. And all of a sudden, you've got, a lot of evidence to provide to the underwriter. So multiple streams of income is great because, you've got lots of income potentially. But from a mortgage application point of view, it just means that you need to get your ducks in a row sooner, and it might be a little bit more difficult to provide everything that the underwriter asks for if you want to use all of that towards the application. So it might take you a little bit longer to get the application over the line from a mortgage offer point of view. But if you're in touch with the right people, your broker, your solicitor, your accountant, if you're self-employed, then it should run smoothly enough.
Okay, so that's good news as well, positive. But so it's a positive to have multiple sources of income. Exactly. But I suppose there's just more to, you've got to get organised. Right. There's more to look at. Yeah. Okay, that makes sense.
For being rich.
There we go. There we go. Well, thank you for that, as always, Paul. Again, hopefully we've helped a few people out on the episode, and we'll be back for part 6 and part 7, which I think will wrap up our self-employed sort of series, won't it? So there we go.
What are we going to do, Tessa?
I know. We'll have to find something else. Here? I know. You've mentioned a couple of ideas already, I think, on schemes and a few other things. So we'll probably talk about that. But thank you, Paul, and we'll speak to you again soon.
Welcome. Thank you, Tessa. Speak to you soon. Bye-bye.